episode, and there's been a lot of things going on, like for instance, the fact that the entire NASDAQ and really the markets in general have just ballooned. We've seen some really crazy growth the last couple of days, and today we pushed 13-month, almost 14-month highs on the NASDAQ. So it hasn't been this high in a full year. Year to date, the NASDAQ's up over 22%. We're talking about from December lows of well over 25%. It basically is if tech hasn't really had a recession on average, if you look at the NASDAQ in the last 1 year, which is perplexing, interesting, and led, I think, at least in part, by what we've seen on the inflation release today in the US. So they said inflation came in a little bit under expected at 4.9%, but core inflation is really what we want to look at. I don't know, all the headlines that I've seen are all, hey, inflation's coming down, it's 4.9, it's great. Core inflation was 5.5. And if you just look at housing and food, it's like almost 10%. And when we look at like our financial independence budget, right, our FIRE budget, it's what most people spend, like the average person on their budget spends 50% roughly on housing, and then 30% on food, and then transportation is also strangely up except for gasoline. But in Canada, actually gasoline's way up because they just introduced a new tax on, I think it's like 15 cents a liter or something. So gas is actually up still even on the end user side. So a lot of interesting developments. I am short the market again. I'm gonna basically just put a short on with a stop gain and a stop loss. My stop gain is going to be when the NASDAQ retraces to 320. That's coming. I just don't know. Exactly when it's going to come. But I think in the next couple of days, we're going to see a retracement. I put the short on today. It was just euphoric. The NASDAQ was up 1.38% at one point. It was down a little bit on the day. So that was quite a swing today from, just the energy and the momentum around inflation and everything else. So yeah. Hope all is well. Hey, how you doing, Port City? Sorry about not having a creative title again today. It's probably not, camera's all messed up. It's probably not ideal to not have a good title. I probably should put something in there, but I was like, you know what? It's been like 300 episodes. Let's just call this a Mike Rosehart Live for the 300th episode, because it has been about 300 live episodes. I've never missed one in almost 6 years now. So that's pretty crazy that so much has happened and there's been so many episodes. So I'll retitle whatever the discussion leads us today. I'll retitle for the playback. Probably something about inflation. I thought about doing a headline around inflation. Like, I see all the ads around like 4.9%. We beat on inflation almost, sort of. But really core inflation's been sticky. So the last reports going into last year, core inflation was like 5.6, then 5.5, 5.5, 5.5. We're not really beating core inflation. In fact, it's still inflating on the 3-month. If you look at the 3-month chart, it's still inflating pretty crazily around housing. So rents are still jacking. Landlords' housing cost, like talking about mostly driven by interest rates, but interest rates being so high, again, housing costs so high, food still really high, new cars up like 10%, just like a lot of the items that we actually spend money on are up, and the things that we don't really need to spend money on, like airfare, information technology, toys, tech, that stuff's down in price. But it's like, who cares? Like the things that we spend our money on, food, housing, medical, like the things we need to live that we spend 90% of our incomes on, they're all going way up. So we have a real problem, right? And what it's signifying to me, what I see when I look at that report, is it's clear we're going into a recession. Because what do people do in a recession? They hunker down, they don't travel, they find a bunker, they stay safe. They spend only on necessary things. So groceries people are still spending, housing people are still spending because they need to live. But now they're not traveling as much. So you're seeing a little bit of a pullback with Airbnbs. Now they're not flying as much. You're seeing flights get cheaper. They're not buying the latest and greatest TV. They're going to make do with the 50-inch TV that they have. And so that stuff's falling in price, which is like, obviously, I don't know how that's a good thing. To me, that's saying, hey, we're going into a recession. It means that the hope is this, right? Like the Fed's hoping that inflation's going to come down and we're not going to have a recession. That's been like the headline, Jerome's kind of headline hope, right? That's not going to happen. The rock and the hard place are, the hard place, in my opinion, is the economy goes to shit. The rock is, basically the fact that we're going to have Like it's either hyperinflation or economy goes to shit, and kind of like which medicine do you want to take? It's possible we get through this with a mild recession. That's the hope. I think a lot of the bond market and the economy and the market right now is all basically pricing in a pivot. So rates coming down this summer and into the fall. Now, Jerome said the last meeting that's not happening. He said that the last couple of meetings. I don't know what everyone else is hearing, but unless something materially breaks, like we have a real collapse or something really bad happens, rates aren't coming down yet. It will happen. Probably something will happen this summer or this fall that'll drive the market down, that'll put pain stakes into the hearts of real estate owners and business owners. And when that happens, and into the consumer especially, and when that happens and people are afraid and they pull back, that is when we can look back and say, okay, looking back, seeing the trends down, we can look at all the data that we finally have showing inflation coming down, everyone's in pain, we're there, Fed's fund rate can fall. But the Fed's fund rate has to stay well above core inflation to drive it down. Core inflation just came in at 5.5. And really, like, what I would consider core is like 7% inflation for real. And then you're looking at a Fed's fund rate of like 5. So Fed's fund rate has to go up a little bit more, I think. We've been seeing they continue to raise the Fed's fund rate, right? Like we had a quarter basis point hike. They've been raising this year. That should drive core inflation down, but it's not. They need to go higher for longer. And so I think probably what this is signaling is the market's wrong. And hopefully by next year we have the pullback, but rates are going to come back down. That's just inflation is trending down, especially on discretionary spending, tech. Interestingly, labor's a bit sticky, so that's going to drive the services, I think, inflation a little bit. But core inflation is what we need to see drop. So when we see 2 or 3 readings of meaningful drop on core inflation, we can know that the fight is being won, and hopefully the Fed doesn't pull the rug and pivot early. That's what we don't want to see, guys, right? As a real estate investors, as business owners, as investors in the stock market, we do not want to see the Fed pull early because then inflation could resurge. If there's any relief, all that capital on the sidelines that's waiting to deploy will deploy. Businesses will start hiring, people will start spending and driving the economy. And a lot of people are waiting on the sidelines till the Fed drops rates. They're waiting to take those, say they have a new expansion project. They're like, let's wait until rates aren't 7%, let's wait till they're 4%. Then we'll lock in and do the project. So there's a lot of capital waiting, a lot of projects just in the queue. And so as soon as the Fed starts lowering rates, we should see an increase in demand and it will drive the economy. And too much driving of the economy will lead to more inflation. So it's a really tight rope that Jerome has to walk. And I cover it because, well, one, I think that if you don't pay attention to this can be your chance. If you're watching this for 10 minutes, 5 minutes, let's say, every week, you can, as a real estate investor or business owner, be aware of what's going on, right? The key headline news over the last year is that inflation's remained higher than we thought, but we're beating it down. Rates have been, higher than we thought for longer. That'll probably persist into probably the second half of this year, but we're probably 6 to 9 months away from a pivot. It's coming, which is great. And the market's it's excited for that, right? I think maybe a little bit too euphoric for that, right? They're just waiting for those rates to come down because as rates come back down and stabilize, of course, what do we see? We see that valuations go up, right? The discount rate that you get to use to value the company goes up significantly as rates are lower. So real estate spikes, businesses spike, especially tech companies, their valuations, if your long-term expected hurdle rate is like 8% to keep up with inflation, and all of a sudden inflation's back down at 2%, not only you only need 3 or 4% and treasury bills are paying 1 or 2% again, all of a sudden tech's looking really sexy on those long-term valuations when they discount that cash flow. So it's, obviously those models change dramatically, I think, as rates come back down. And hopefully they do. We don't want them to pivot too early because it will be like the 80s where we can't get inflation under control. I'm thankful, and I think we should all be thankful that the current leader on inflation is, well, it's the US, because the US reserve dollar, which I think is fading. I'm shorting the US dollar. I think that, there's a play there to potentially see it fall. Will it fall relative to the Canadian dollar? I don't know. But will it lose strength, I think, to the Chinese dollar and some of the BRIC formation that's happening right now? Because there is, interestingly, quite a pact. Saudi Arabia has now looked to join this emerging market, right? Coalition group, right? It's Russia, China, Brazil, Saudi Arabia, and several other countries. Now they're talking about India joining as well, potentially, South Africa. And so if these countries join together, they have a larger GDP than North America. Just Russia and China together have a larger I believe have a larger GDP than the United States. So the United States is losing its superpower reserve status. And right now, though, any rates, the reason we follow what Jerome does, even though, as a Canadian, I still have to follow what he does because we have to follow suit. They set the stage, I guess, so to speak, when it comes to inflation. And because their dollar is so strong and been so strong, US inflation hasn't been that crazy. Like Argentina's inflation is like 150% right now. There are places like Turkey, Argentina, in the Middle East, there's several countries. In the South America, there's countries where well into the double-digit inflation, some in triple-digit inflation. And so it's when your dollar isn't powerful, then inflation can really whip your ass. And so this could have been much, much worse if the US dollar wasn't the reserve currency. And so thankfully it still is. And so we look to them for what they do and how they handle things. And, it seems like there's a pretty good captain at the wheel. In the past, no. But right now, I like the way that Jerome has been steadfast on not pivoting early. I think he's even referenced the fact that they did that in previous administrations and previous, tenures. And that led to the Volcker era, right, in the 80s, where basically, there were several bad policy decisions around letting up on rates and helping people. But you can't. You have to stay hard. The market wants him to pivot, of course, right? Like everyone wants rates to come down. Everyone's tired of the pain. But the pain, and he said this last time, again, for the fourth time now, he said, and I'm going to be paraphrasing, but the pain of the pivot, effectively, the pain of inflation running again and having an unstable economy is magnitudes worse than any pain we will feel with the Fed fund rate being 5-6%, whatever, in that range. And I think the Fed's fund rate may go even higher. Yeah, that's possible. The more prudent strategy is probably, because he's under a lot of pressure with the debt ceiling issue coming to head. I think here in June, we're going to see a little bit of volatility and turmoil leading into that. Another reason why we got a little bit of a short on is because I think there'll be opportunity through that volatility to make a little bit of money. But, it really is one of those things right now where you've got to be very, very careful. There's a lot of volatility. And I think that it's possible that the Fed gets through this without a major recession. We may just have a minor, drawn-out recession. And that's better. Like if rates just stay kind of where they are, if they don't hike anymore, just keep them where they are, we'll see the effects of that. If we see core inflation start to drop, it didn't drop. So this last inflation report, the market was rallying today. But I'm looking at it, I'm like, geez, this isn't so great. Core inflation is not really moving. We would expect more significant movement month over month. And so, I don't know. We will see, I think, if and when we get the next inflation reports in the next coming months, if we're starting to beat down core inflation. And that's really important. At the end of the day, that is what is going to drive his decision to give us some relief on the rates front. So, hey, some questions coming in. David, how you doing? Can you elaborate on how soon you can invest in deals alongside you? Or be using a platform like Addy Invest? There are so many different platforms you can use. It's on my mind. It's one of the major projects that I want to bring in either this year or next year. So stay tuned for that. What I don't have down pat and where I learned from what I did wrong last time, I sort of had a bunch of JV partners, is last time I had a challenge with operations. The challenge where they didn't have enough me to go around. And I don't want that to happen again. I bought 50 properties in a year and it was hell. We were trying to renovate all 50. We had like 50 to 100 staff. My life was the worst quality, I think, ever. If you go back to those videos, some of those in like 2018, 2019, they were some of the worst for me. I really felt like, that was a time I don't want to go back to. So if I do this, I need running mates. And I need people who I need someone logistically who really understands how to use tech and how to use cheap labor to run operations. Someone who understands property management. So maybe it's a partnership, and I'm looking at a few options and a few ideas, and I've mapped this out before. It's just putting the time to it. I have so many things that draw my time every day that it's hard to find the time to sit down and dedicate. But I should really build out something, and someday I will. It will come. Both in the education business space, where I plan to partner with someone who can help me on the back end to build the courses out. Someone who's like more of an equal that I can work with, and together we can build a brand around some really quality, education content and building out a really good real estate business and running and building wealth through prudent real estate investing strategies that are focused on cost control and maximizing the deal acquisition. You want to make a really good buy. You want to buy way below market, and then you want to renovate it really cheaply so that you have a huge spread from when your ARV or after renovated value. And I think there's a lot of pieces to that. Like I have courses mapped out on like property management, courses on construction management, courses on deal acquisition and wholesaling, and then courses on money raising. Like how do you find money from the bank, from financing partners, B lenders, A lenders, private money, all of that. And so there's, in my brain, I've got out, and I do on paper actually have some outlines roughed out a little bit. They're very, very like one pager, but at some point I'll build that out. And then on the investing alongside me, I think through that education business, there will be a few people who will come out, and just people in my network potentially who will become like the inner circle of the Rosehart Roundtable. And I'll tap some of those people, I think, to build out something. For me, like I'd much rather have 25% of a billion-dollar fund than have, 100% of a smaller fund. And that's just where I'm at right now. It's where I feel most comfortable. I like how do I explain this? When you're a real estate investor, it's very lonely. It feels like you're steering a ship all by yourself. When you work at a company and you have a team around you, it's a different atmosphere. And I sort of miss that in some ways. So in a lot of ways, it's just nicer to share the load. Like to know I can go on vacation for a week and I don't have to worry about 10 contractors calling and property management issues. And so I would like, in my ideal world, the things I like to do are acquisitions, high level strategy, capital raising. So those are areas that I would like to focus on. I don't want to do operations. I don't want to be running a construction business. I don't want to be running property management. I don't want to be managing the managers because that's a job in and of itself. And there are systems you can build out, no doubt. And there are people you can bring on. But at the end of the day, I see these gurus on Instagram and Facebook and YouTube, and they're like, I run completely passive businesses and it's amazing. And it's like, if you have staff of like 10 people, you don't have passive. You just don't. Like you can have a COO, but they're still gonna be calling you for weekly touch points. And there's still employee issues and disputes and litigations and problems and all of that. If you're very focused on optimization and the bottom line, it weighs on you and it weighs on me. And so having someone else to carry that load with me helps me sleep at night. And so when I find the right running mates that are operationally excellent, I will blow up a fund. And so you guys wait, it will at some point happen. And there will be a chance to invest alongside me. Currently, the only way to invest alongside me is to get on the wait list. I have a wait list of investors who want to work with us. And I really only work with like 2 or 3 investors right now that I really like and have a relationship with. That's been the way I've been doing it right now. At some point, there'll be a fund and you'll be able to buy into that. Not yet. Soon. I think it's going to come soon. Same with the education piece. I think there's going to be a huge opportunity for that in the coming. I'm working on some things right now. We actually have a beta now. A follower built me a beta of basically a chat GPT bot that's Mike Rosehart bot. And you can ask it questions, and it's uploaded every one of my videos for the last 5 years. Is basically what it's doing right now. It's digesting all of that, and it knows everything I do. So if you ask it certain questions, it will recite stuff from my videos, which is super cool. It's actually like an AI built and driven coaching bot, so to speak. And it would be great for like entry-level questions, the same boring questions that you always get. That will be a piece of the education content. And there will be one-on-ones, there'll be group calls. This live video we're doing now, at some point soon, very soon, I'm gonna have a link to a website, and there's gonna be basically 20 to 30 minutes where I do my normal stream like this, or we do live Q&A for free. And then there'll be a second module that's like a private mastermind group where we can discuss things that I can't say online, things that are maybe inner trade secrets or maybe a little bit too far politically incorrect, I suppose, so to speak. So that's more of what I'm gearing towards, and then we can build something there with the same, sort of mindsets that I had 3-4 years ago. I can train people to hunt and to think the way I do, and that will lead to more cross-pollination and growth as well. So those are 2 businesses I want to be focusing on. I'm still wrapping up a lot of loose ends because, again, I've got a small family flipping business where I like my dad works for me full-time, my brother works for me full-time, my cousin's working on stuff basically full-time, my best friend's working in my business like full-time. I support several people in my current business. It's like a small family business, and so I'm always still doing things, but not at a scale that I should be. And so I need to stop, just chilling every day, to be honest. Like I do a lot of like sitting on my phone, hanging with the kids, trading, doing a couple trades, and then I'll take a call, then I'll like do something else, I'll go work out. I'm not super focused on the business, and I should be. My kids take up a lot of my time too, and it's not an excuse. It's just I just would rather in their core years right now. I'd rather spend more time with them than build out a fund. But it's coming. It will come. It's something I have fishing. I have a bunch of lines out right now, and I'm fishing, and I think about it and I ruminate on it, and I've been taking some action towards that. Stay tuned, is what I will say on that, without saying too much. Don, how you doing? He says, so rare that I catch these live videos. What's up, Mike? Always catching the replays, but thank you so much for the content. Don, welcome. Thank you for joining in. Evening, Mike. Credit union offered to fund my latest deal. Right on. That's awesome. Those rates are a little dicey, but fixed rates of 1 year at 6.5, 2 year 6.4. Go to ratespy.com or .ca, I think it is. And RateSpy has amazing rates. Like you can get a 4.8% 3-year fixed right now with any lender. That's their like most teaser. They spy on every single broker, so you can see, basically every single rate from every single big bank or credit union, and use that to negotiate lower rates. But sometimes, I mean, if Prime in Canada is at 6.7, so that's not terrible actually, but you can get fixed in rates. Like the market is pricing in a pivot on rates coming down. And so they're actually letting you fix out for 3 years at like 4.8 right now in Canada, which is prime minus almost 2. But yeah, they're going to make it up on the back half is their hope. The first half they'll lose, and the second half of the term they'll win. Hey Wes, how you doing? Grinder says, hey Mike, hope your family is good. How are Airbnbs in Florida? Are you getting lots of bookings? So we're having some challenges with some interesting things I've learned going through the Florida process. And yes, we are. One of the Airbnbs is up and it's getting bookings right now, which is great. We are in the slow season, I guess. Like the peak season for Florida is like December to April. So we're kind of out of that. We're in that little quiet time before the summer rush again. But we are getting bookings. Yeah, like the one is getting like $350 a night, and our acquisition cost on that is like probably high 300s. So it's pretty good to get to like $350 a night when we're getting bookings on that. We had some challenges. There was a tornado that actually landed on the property, picked up the trampoline and threw it like just as we were getting it ready for Airbnb. The other property, we have one thing where you're on like a dishwasher to be installed and the golf simulation putt finished up in the back, and I've been having an issue with the contractor there. That one's about to come online too. And the third one I just rented currently to the previous owner. And then the other one we just sold. Hopefully that'll be closed out soon. And the fifth one we're fighting a tenant off. So that's the Florida update. I don't usually give updates for Florida, but that's kind of what we're dealing with right now. And so it's good. We're working on some deals down there too, some new deals, some new acquisitions. But yeah, it's gonna be coming online pretty soon, and we're excited for it. As far as like forecasted for the 3 properties we plan to hold, I think we'll probably rack in around, I want to say like $1,000 a night when it's fully booked across the 3 properties USD. So that'll be interesting to start seeing that coming in. That could be like 20 grand a month with a fair amount of vacancy. Let's say 25,000 on peak. So that'd be some good cash flow when those properties come online. Well, one of them is online, but get the other 2. They're so close. This is so stupid. Little things that we want to get everything just perfect before we take photos. And we put a new metal roof on the one, and he's got to come back and like do some caulking and little things. And it's like, there's always little things that keep you going, but from the final project. But we're making progress. There's lots of margin on those, so happy about that. And then in Canada, we've got a couple of cottages coming online right now for Airbnb too. So excited for those to come online. And we got some flips that we're disposing of too, which is exciting to get those cash outs. I have some property in London, another property in London that's coming up for sale. If you guys are interested in that as well. And my new cottage, if you saw on Instagram, that I got a personal cottage, and it's a beautiful, like 28-foot ceilings, like beautiful timber framed right on the lake. Just a beautiful, beautiful property. It could rent for $1,000 a night in the summer there. So exciting to have that project as well. Port says, hey Mike, what advice would you give for negotiation process of getting accepted offer and conducting an inspection? What's the best way to negotiate without losing the deal? Well, you've already got accepted offers. So, I mean, no matter what, they can just say no and you can still go forward. So you can never piss them off once an offer is accepted. So I think it's a smart idea to negotiate after you got it under contract. Negotiate as much as you can, but then come to an agreement. And then after the inspection, use those items to drive the price down a little bit more. So definitely do that. Worst they can say is no, and you can just honor the contract you already have going, right? Hey Mike, when you were looking at deals, specifically in Florida, did you find deals yourself or do you get a specific realtor? Great content, by the way. So DC, it just depends. There's a lot of stuff off platform. Like you go to Facebook and Kijiji and Marketplace, and I guess they don't have Kijiji down there, but Craigslist and all those platforms have stuff. You also call up wholesalers and guys that specifically just do assignments. So they're not realtors. They're just dudes who go knock doors and find stuff. So a couple of the deals were that. So majority of the deals came through that way, but we do buy stuff on MLS too. And you can negotiate stuff like the one we bought. It's a vendor finance deal. And I think that 3.5% interest only. Our payments are $13.90 a month, interest only for like almost 3 years. And that's a great deal, right? Like, I mean, market rates for that mortgage would be like $4,000 a month or something, right? So we're getting a huge discount. It creates cash flow every month. So that's exactly what you want, and that's sort of ideal, right? I will say that sometimes a deal doesn't appear like a deal, but when you dig deeper on it, what you'll find is that there's a way to manipulate it into a deal using some vendor financing. Maybe sometimes you can buy turnkey too, and it's, especially right now, it can come furnished, or it can come in a way that they're not seeing the value. So sometimes a turnkey Airbnb, if you could buy something turnkey right now at the right discount from a guy who's not managing it well, you could pick up and you could clean up because your investment's very, very low. And doing it, it's already set up. You just do some staging tweaks and some improvements to the listing, and you can make bank, right? So there's definitely opportunity for that too in this market. But yeah, off market's great. The challenge with the off market is you're gonna do a lot more renovating. So if you're comfortable taking on the big renovation projects, then definitely buy through wholesalers. There are hundreds of wholesalers in Florida. There's so many deals in my inbox right now, I can't even look at them all. Like I think I probably have 1,000 to 1,500 properties for sale just on the east coast of Florida, west coast too. I get some emails of stuff, just like $200,000 houses just flying in. And I try to cherry pick the best ones because there's a lot of stuff that is like 10% on our market value, and like 10% isn't enough to really be interested for the risk. But yeah, definitely look off market, look on market. There's stuff everywhere if you know where to look. So get looking. Alan says, hey Mike, thanks for the content. The potential fund, would you build portfolio managers from your strategies and essentially grow AUM? The idea of mentees to MD is pretty intriguing. Yeah, so I think that the idea really comes down to like, what do I want to be doing with my time, right? To scale a business in real estate, you need to be focused on growing AUM, right? AUM, is assets under management. And the reason you need to grow assets under management is because at scale, you can do a lot. You can when you start getting staff in to take care of your problems, instead of paying 10% for property management, you can probably get down to like 5%, right? With Airbnb, instead of paying 20 or 25, you can probably do it at cost for like 15, 14 and run a really good business. So in-housing is super key on the property management side. On the construction side, I'm not convinced. I think outsourcing construction is probably better from a liability perspective. Bring on an independent contractor, but negotiate the hell out of the price. So bring in 3 or 4 or 5 of them and get the best price in writing. And just from a liability perspective, in the US specifically, because everyone's so litigious in the US, I would say renovation, construction, you'd want to do partnerships. But getting that asset under management to grow significantly, that is where I can have meaningful impacts on my net worth. Like, I could go find deals at 25% off. And if I went and raised $100 million and we bought $300 million in properties and it was 25% off, and like I can hit those bases all day. We bought properties at say even 20% off. 20% off of 300 million is $60 million in creative value the day you close those contracts. So how would I do that at scale? I'd have to build out obviously an acquisitions team. It couldn't just be me negotiating. There'd be a set of criteria we would look for to filter through the right kinds of deals, the right kind of metrics, and then we'd have people out there negotiating on those because you got to grind every deal. So there's got to be someone who's incentivized to do that. And so there would have to be some cost side to that. At scale, I can't do it. So there would be an acquisition fee of some sort to cover that cost. So it could be break even, maybe 0.5% or 1% of the asset. But that could be a huge amount of lift for both the investor and for myself, right? If we split that, whatever percentage you split that, that's a huge amount of money that I'm leaving on the table. And that's an area where, like, instead of me doing 12 flips and making $700,000, I could do 1,200 deals and they wouldn't have as high of margin as those 12 deals, but that scale would allow me to make 10x or 20x or 50x as much, right? So in the game of monopoly, or in the game of winning in business and finance, that's gonna get me way further ahead than just slaying deals one at a time, building a small portfolio. Not that there's anything wrong with that, because I have lots of followers on here who buy a property every quarter. They over the last 10 years they've accumulated 20 or 30 or 40 properties. And it's like, that's great. That's awesome. You got a good nest egg there, and you will, like, over the long term, even if you sold your properties and put it in the S&P 500, if you start building early and you spend a significant percentage less than you make, over the long term, you'll build great amounts of wealth. Like, you'll build 10, 20, 30, $100 million. Anyone can make $100 million. If you're a top 1% earner, you're a doctor, you're a lawyer, you're even a teacher in Canada makes 100 grand a year. If you're a teacher, two teachers in Canada together just save like 60% of their income, learn to live together on 40% of each of their salaries, or invest one person's salary entirely, live on the other person's salary. If you can't live on 100 grand a year, I don't know what's wrong with you. So find it, like firefighters, police in Canada, firefighters, police, teachers, any government employee makes close to damn near 100 grand this day and age. So like anyone can do it. And if you do that from age 20 to age 65, it's a 45-year period. You compound that, like, geez, everyone should have 20, 30 million. The problem is people just don't do it when they're young, and they sacrifice and compromise in their early compounding years. And that's where the flaw is. So don't do that. Start today, start saving today, start putting a little bit aside today. When I say a little bit, I mean half of your paycheck. Pretend you live on half as much as you have and find a way to make it work. Where can you cut? If you love to like golf, find a way to golf every week while still saving half your income. There's a way to do it, right? Or find ways to earn more money. And you should be doing both of those things. Like, definitely find ways to earn more money. And for me, it comes down to just wanting to build a legacy. Like, at this point, you guys are circling back to me. I'm not a good example, right? Because I've already kind of cracked the code. I've built up enough that I can't even spend like, if I just took everything I have, liquidated it, and put it in like a REIT, real estate investment trust, that paid like 10% a year or something, right? Like, I could never spend the income it would produce. So it's not about spending. It's not about consuming. A lot of people get messed up and they think that like people want to be rich to consume. No, it comes down to legacy. It comes down to influence and power and having impact. With power, you have impact. And that's where it's fun. Like, how can I change the world to my liking? How can I make things better for other people? And that feels really damn good. So that's what it's about. It's like having real impact. And over the long term, real estate, if you can buy smart and you can reallocate those assets over time, sell them off at top market value, keep buying them at 20% discount, I could roll a fund into $1 billion fund. And that would be kind of cool. That would be something that would be like a legacy thing for my family. And so it's something I want to do. It's on there. It's on the bucket list. That'd be cool. It's an ego thing for sure. And like, lifestyle isn't that much different, but there are extra levels. Like, it's different flying commercial versus flying private, like just a better experience. Is it that much better? I don't know. I'll let you guys know. But yeah, that's my rant. That's another question come up here from Kansas. It says, hey, Mike, building a Madden 23 team. If you can name 3 NFL players, that'd be great. If not, one can do. I don't at all have any information at all. I don't even watch football. Like, I've watched football a total of like 10 times in my entire life. So I would just name like top 5 celebrity football players. So I would give you bad advice. So don't ask me for something like that. I would have no at all value to contribute in that area. You want to ask me something about real estate, about personal finance? Like, I've got my 20,000 hours logged. I've got mastery of those areas, but no, nothing about football. Sorry. Growing up, I didn't grow up with a dad in the house for most of the time. So sports weren't really a thing. I would play sports, but again, my school didn't have a football team. So we would play like soccer, or I'd do swimming, or I'm a great swimmer. I can skate on the creek behind the house. For me, I'd rather do than watch. Watching isn't that entertaining for me. It's like, even with gaming, people are into watching games on Twitch, like watching other people game. I would rather go game myself. People want to watch hockey. I'd rather go play hockey myself. People want to, I never got into football. This wasn't my thing. But yeah, in high school, I was so focused on getting scholarships and working. I was working like 34 hours a week at Tim Hortons while trying to keep a 95 average in high school. I think I had time to do like football, or like have fun. A little bit. I had a little bit of time for fun. But, I didn't have time for that. And unfortunately didn't get to throw the pigskin around with my dad. So I didn't have that experience that most kids have where they learn how to play football. So it wasn't an option. Ellie says, would you pick 4.65% locked for 3 years or 5.8% variable for 1? 4.65 is pretty cheap on a 3-year. You know what's nice about the 3-year too is that you can, most mortgages in Ontario, you can break at the six months before renewal, no penalty. No renewal fees. Canada's great, by the way, with A lenders because there's no renewal fees. They'll give you the appraisal fee back. There's no lender fees. The US is brutal. They're like nailing you with lender fees and setup fees and renewal fees and appraisal fees, and they don't comp anything. It's horrible. You're like, if your mortgage is 6, you're paying like 8 to set it up in the first year. It's brutal. Just as a random comment about the lending sphere between the US and Canada. And it was great when the US was at 3% 30-year fix, because in Canada, you can only fix in for like 5 years and you have to keep doing new terms. In the US, you lock in for the life of it, which is really actually a huge bonus. And there's a lot of things I really like about the US, right? But right now, not so much. Rates are kind of crazy right now. So I would not lock in on a 30-year right now. The loans I'm looking at putting in on the properties that we have are going to try to be short-term stuff because we think that things are going to fall. That's what we want. We don't want to lock in on a 30-year right now at 6% or 6.5%. Craziness. That would be horrible. But yes, at some point, those mortgages will be sold. People have 30-year, banks will have 30-year 7% notes on their books, and they'll be able to sell that when rates fall again at 2 or 3%. They'll be able to sell those for crazy amounts of money. So yeah, I would go with myself personally. I'd go with like a 2-year fix. So if a 2-year fix is an option, I would go with a 2-year fixed, because the 2-year fixed you can renew at 1.5 years. So you're only locking in for 1.5 years, but the 2-year fix is probably still in the high 4s. And I would take high 4s because in the next year you have, what if inflation takes 1.5 years to be battled? Then you win out big time. Before, if they keep battling inflation and rates stay high, then that first 2 years if you do a 2-year fix, that first 1.5 years, you're winning the whole 1.5 years, and then you can renew just as rates are coming down, right? So I would do a 2-year fix if it was me. If I had no option of a 2-year fix, I'd go 3-year fixed. Right now, that's my personal preference. I would take 4.5 or 4.6, whatever it was, over almost, I think it was 6%. What was the variable? 5.8. 5.8 is actually not bad. It's not terrible. My HELOC's at like 6.7 right now, just floating at prime. Brutal. Alrighty then. I think I got through all the Q&A. Sweet. All right, guys, if you're watching the replay, you guys know what to do. You can, okay. You can, sorry, I just got like 4 texts come in. Okay, if you want to stay tuned, I'm going to be putting in maybe next week, maybe the week after, a link to my website where you're gonna have to put your email in, and then you can join the private part of this stream, which I'm not doing today, but I might do next Wednesday if I get the tech together. It'll probably be a Zoom call. I guess it'll be maxed out to 100 people for free. It'll be free at first, but it will be a paid thing. So we might try a beta test of it for free. So definitely email me or reach out for that, and or just stay tuned and listen to my Instagram. Look at the comments. I'll post it on here. I'll link to the website where you can go and put your email in, and we can set that up. So that is coming. I want to practice keeping these streams shorter. I will retitle this something so that you guys can find it. I just today thought, hey, I'll just throw something out here, Mike Rosehart Live. Anyway, thank you so much for watching, guys. We'll see you next week. Remember, the secret to unlocking it well through you: 3 levers: spend less, earn more, and maximize returns and difference. That's it. The secret to building wealth. That's the secret formula. Thanks, everyone. And we'll